Their cash flow, the breadth of growth across multiple categories. So the essentialness, as we call it, is manifested in multiple ways across the industry. The arms races that I've been talking about the last few years in software development, silicon development, very much remain the case. Again, perhaps even more so. And then we have the infusion now of AI and ML effects, not only in terms of business effects, but obviously also in terms of technical effects. So, to talk a little bit about what's occurred over the last year. The EDA Big Three, that's Synopsys, of course, Cadence, Siemens EDA, had cumulative revenues for the 12 months ending Q1 of 25 of over $11 billion, up over 12%. IP also happened to have grown over 12% in that period, more than $2.25 billion of cumulative revenue for EDA IP. Hardware up even more strongly. It's smaller than IP, but had also quite good growth. And also, since this is a view from the street, we should talk about the enterprise value of these companies, which did decline over the last year. Still substantial, $150 billion, but down over almost 15% over the last year, but still up considerably from a decade ago. When Mentor was still public, the combined value of the three companies then, DAC 2015, was approximately $16 billion. So you can see that the value of these companies has improved quite significantly. In terms of other events, Siemens concluded its acquisition of Altair Engineering faster than they had estimated they would close it, less than 6 months. The Synopsys acquisition of Ansys is still pending. One major regulatory approval still remains. And the other thing that's occurred, which was somewhat foreseeable, is that NVIDIA has now become the largest R&D spender in the semiconductor industry, having surpassed Intel. And so that, I think, is a quite significant change in the industry. And then last but not least, we have, of course, the whole tariff situation and export restrictions, which remain very much a fluid situation. It's difficult to be conclusive about all of that at the moment, but clearly can have material effects on the industry. So this little formula is to suggest that there are many concepts and themes and trends in the industry affecting EDA that happen to begin with the letter C, which I will go through over the next few minutes. The first is convergence. You'll recall that a year ago and 2 years ago at DAC, we hosted an executive panel with multiple companies, Cadence, Synopsys, Siemens, Dassault Systems, and others, to talk about the melding of the worlds of EDA and technical or industrial software. We didn't have a panel this year, but clearly that trend remains very much the case. It's still a critical consideration for company strategies. We see Siemens having built a broadly representative convergent portfolio. The Synopsys-Ansys combination is very much another manifestation of that, and other indications of that as well. I just saw 2 weeks ago at an event in Paris a very interesting presentation by Volkswagen on their engineering and product development process, which exactly spoke to this point of the melding of mechanical, electrical, and even applications software development. So very interesting example from a major car company about what they're doing in their product development. And of course, automotive, as you know, for this industry has also become increasingly significant. Core. Core refers to core EDA software. By our definition, we call that total revenues minus IP, minus hardware. It's basically the software business. This is one of the critical metrics that we've been following now for the last number of years. And of some investor concern in recent quarters is that core EDA revenue, that is for Synopsys and Cadence, has decelerated from double digits into the single digits. It's possible that we'll see a reacceleration back into the double digits, but for the time being, there is an investor concern, which may explain in part why the enterprise values have declined over the last year, that the core business has decelerated, offset to some degree by the growth of IP and as well the growth of hardware. But this, again, for our purposes in terms of assessing the companies, has been a critical metric and will remain so. Concentration. That is to say, the concentration of EDA vendor share of total EDA spend. This is a point I make every year in this talk. And the big four, that is Synopsys, Cadence, Siemens, and Ansys, have 92% share of the industry. Wasn't that long ago that the share was 5, 10 points or more less than that. A lot of that growth and concentration is a combination of organic and inorganic effects, mostly organic in the last number of years, but previously there was certainly a substantial amount of inorganic effect as well. That is to say, Synopsys acquisitions, Cadence acquisitions, and Siemens acquisitions as well of other EDA companies. But the other 8% outside of that 92% for the big four is a substantial business. 8% of a $15 billion industry, which is what EDA revenues were last year. That's $1 billion too. That is still a substantial amount of revenue for everyone else. Customization. So this is not a wholly new concept. Custom development, custom design has been an ongoing phenomenon for years in EDA. We've all heard the term domain-specific devices, domain-specific applications, and so on and so forth over the last few years. We would posit, however, that we may see even more of this, and that clearly we see, particularly from the systems customers, as they're called, Microsoft and Google, Apple, of course, I expect we will continue to see significant customization activity. And to the degree that does occur, that will continue to be, I think, a plus for EDA, because that will, I think, require the consumption of additional EDA software, the core software I mentioned earlier, hardware and IP. And perhaps there's another factor here as well that we've been thinking about recently with regard to a catalyst for customization, and namely that's the economic pool represented by NVIDIA. And what I mean by that is NVIDIA's gross profit last year was nearly $98 billion. So that's clearly the return, that's the value they get from the R&D that they've been investing for the last number of years. And so it's conceivable that if you want to think about it in broad economic value terms, that pool of $98 billion of gross profit represents some value that the customers could perhaps retrieve for themselves through customization. I am not making any suggestion that NVIDIA, is in difficulty or anything of that kind, but it's an interesting economic concept, I think, to consider that you have this massive pool of gross profitability that represents what many customers are, in effect, willing to spend for what NVIDIA provides that conceivably they could redirect in some other direction. So we'll see if that happens. Again, we're not making a particular call on NVIDIA. It's just a thing to think about with regard to this massive pool of gross profit. Cake. For this, I owe thanks to Cadence, specifically Anirudh, who has spoken interestingly about their view of AI, which is not necessarily unique to Cadence, but they use this term. That is to say, the three layers, as they call it, of AI. There's the underlying layer of the cake, which is compute. Then you have the other layer, which is infrastructure, the build-out that we're all aware of, data centers and the like. And then the third and perhaps most interesting and newer way of thinking about it is what they call physical AI. Autonomous vehicles, and other forms of interacting with the real world, i.e. physical AI. So that's a really interesting one. And again, credit to Cadence for coming up with the term. Who knew that Cadence also had a bakery? But the way to think about this is the implication is a system of systems, from the lowest level to the highest level, that is physical AI. Those are systems of systems, and that is inherently an indication of complexity. Complexity is always good for EDA. And so this phenomenon of AI, I think, has multiple implications for this industry, not only in terms of the AI and ML-enabled tools that EDA provides from Cadence, Synopsys, Siemens, and Ansys, but in terms of how their customers employ the tools for their processor development and the like. And then beyond that, we'll see, I think, an additional incarnation having to do with systems development or development of systems. So that's the origin of this term. China. So China has multiple areas of interest for this industry. Obviously, it's become a major customer for EDA. China is the second largest market after the US for EDA IP. China as a software market for EDA software, also a major market, the largest certainly in Asia. Interestingly, based on the 2024 industry data, China EDA, just the software, but also including the hardware, accounted for a tenth of the industry. But China IP was a fifth of global IP revenue. So that's an interesting distinction between their software consumption and their IP consumption. Together, China was a mid-teens % of the total industry. So that's China as a customer. Now, of course, we also have issues of China vis-a-vis export restrictions. I am not going to forecast what's going to become of that. It's too fluid a situation, but clearly it's material, as we've seen in the last few weeks, with new restrictions being put on. The EDA vendors are trying to sort out what it really means in terms of the restrictions on current business, new business, whether it affects software only, hardware and or IP. So very fluid situation, but clearly having to do with U.S. policy vis-a-vis China's development of technology or use of American technology anyway. And so we've gotten through the C's. We will continue to monitor all of that, of course. So in terms of the state of EDA, the industry has done very well for the last 15 years now. We've seen consistent growth for 15 years. As expected, the industry surpassed $15 billion in 2024. We are estimating more than $16 billion this year, up 7%. And this sets aside the possible suspension of business to China. In other words, just taking into account current forecasts, current guidance from the companies, not taking into account the possible subtraction of revenues that would otherwise go to China. So for the time being, this is an as-is number in terms of expecting 7% growth for EDA in 2025. And again, the industry is up by more than 150% in the last decade. And as I mentioned earlier, the concentration has grown now to over 90% for the Big Four. So this refers to the investments in R&D by the EDA companies. I talk about this every year because it is a crucial thing for this customer base, how much and how well Cadence, Synopsys, Siemens, and Ansys, and the others invest in R&D. As you can see, last year, Cadence and Synopsys together had over $3.6 billion of R&D, 34% of their revenue. We're estimating close to $4 billion this year. That would be 32% of their estimated revenue, up over $300 million. And then we expect over $4 billion for next year. So I would say that clearly the EDA companies are continuing to invest, as they should, substantial amounts in R&D to support the aforementioned arms races by their customers. We calculate that Siemens EDA has about $700 million in R&D spending. All of Siemens software, known as Siemens Industry Software, we think has about $1.4 billion. So half going into EDA, the other half going into more of the industrial and technical software side, CAD and PLM and the like. So this is a depiction. I show this chart every year, updated now for our estimates through 2026. The upper blue line is the percentage of revenue, purple for Synopsys, red for Cadence, of course, black is the combination of the two. So again, this is just another way of showing the ongoing absolute growth of R&D spending by the two largest companies in the industry. So the catalysts are in many ways ongoing and more of the same. There are some new ones. But for us as investors, one of the most interesting phenomena to have observed over the last many years is the breadth of growth across EDA. EDA is a very complex portfolio. That is to say, there were dozens of categories of software, as you well know. Many of them relatively small in terms of revenue, some quite large. Physical verification, implementation, hardware, and then those in between. And where many, many years ago the growth was perhaps more narrowly based, it's very important and I think sustainable that the growth has become so broad across multiple categories in the industry for the last many years. And I think those are in many ways irreversible technical trends and technical requirements on the part of the customers. So as I mentioned earlier, the EDA companies enable or employ AI in their own tools, like DSO.ai from Synopsys, of course, and the tools from Cadence. So those are their branded tools. And one thing I would also like to point out as far as that business impact for them is concerned, while it's difficult to quantify, we do think that within the totality of our engineering software coverage, that EDA is furthest along in terms of the production deployment of AI-enabled tools, as compared with, let's say, the industrial world, where it's beginning to happen, but not as far along. And then also the other part of the engineering software that we cover, known as AEC, Architecture, Engineering, and Construction, companies like Autodesk, and for example, they too are introducing this kind of enabling technology, but that industry is further behind. So we would certainly encourage the EDA companies to be more descriptive in terms of the business impact of their AI tools. We'd love to see this every quarter, if possible. But for the time being, we think qualitatively that EDA is furthest along. And it makes sense because the productivity impact, given the enormous complexities of the things to which AI and ML are being applied, can have significant productivity benefits in terms of PPA, quality of results, and all those sorts of metrics that matter in this industry. So now we'll start going through some of the business impact and some of the numbers vis-a-vis EDA results. So Catalyst, of course, result in EDA bookings, one of the most important things that we track and model and forecast for our companies. And so last year, the combined bookings from Cadence and Synopsys were close to $10 billion. We're estimating possibly as much as $13 billion this year. That will depend in no small part on whether or not we do see a large Intel renewal by the end of the year. That, of course, is a question now in terms of the magnitude of Intel spending. They are still the largest. We calculate that Intel's EDA spending last year was quite possibly very close to $1 billion. But after 4 quarters of sequential decline of R&D, which I'll show in a minute, it's quite possible that by the time the contracts come around for renewal, there might be some changes in capacity needs and spend. But for the moment, at least by extrapolation, we would expect as much as $13 billion this year, and then more so next year. And if that's right, that would suggest a 5-year CAGR for bookings in the low double digits. And if that occurs, then we would see an uplift in the core EDA numbers that I mentioned earlier, because the bookings growth would exceed the recent revenue growth, and therefore there would be some, hopefully, some reacceleration on the revenue side. This is just a plot through the most recent quarter for ANSYS EDA bookings, Cadence, Synopsys on a trailing 12-month basis. Obviously some variability around large contract timing, but basically still up and to the right. And this is the combined. So ANSYS, Cadence, Synopsys combined bookings for the last roughly 13 years. As you can see, a few years ago, there was a substantial impact from Intel going back 3 or 4 years. Then it fell off after the large contract, but still up and to the right, basically because of everybody else over the last few years. This is the book-to-bill. Obviously, it varies substantially by quarter, but basically it's an up and to the right phenomenon for book-to-bill. Cadence and Synopsys combined book-to-bill has been positive for the last 15 years every quarter. So 15 years of positive book-to-bill. And that the upper blue line is bookings, and then we see revenue. So clearly, the difference between the two is backlog growth. Speaking of backlog, so as of the end of the most recent quarter, Q1 of 25, combined Big 2 backlog was $14.5 billion. The current RPO, that is to say the revenues from backlog over the next 12 months, which is again one of these metrics that we really, really like. Not to say the numbers are always good, but we like having the metric. And so that's over $6 billion as of the most recent quarter, up 6%. This is after an extended period of double-digit growth. And so again, we do need to see that this number will begin to accelerate, hopefully back to the high single digits, then back into the double digits. But in any case, the 3-year CAGR as of Q1 was 9%. So there is the possibility of reacceleration based on that history. And so interestingly as well, as far as current RPO, for the last 14 quarters, Cadence, while the smaller company overall, has had a larger current RPO in terms of their conversion of backlog to revenue. The difference that keeps Synopsys' revenues higher over any 12-month period is their much larger IP revenue, which is 2.5 to 3 times that of Cadence, and, as we'll show, higher hardware revenue as well. So all of those things, three things together, keep Synopsys as the largest company in terms of total revenue. Also, we look for what's called revenue coverage, percentage of estimated revenue from backlog. In the case of Cadence, 61% of their estimated revenue comes from backlog. In the case of Synopsys, as of the most recent quarter, 39. It's only a coincidence, by the way, that those two numbers add up to 100%. It's not actually the situation. It just happens to be the case that Cadence has higher coverage proportionately in any given quarter, and Synopsys less because of their dependency in any upcoming 12-month period on IP drawdown as well as hardware. So this is a plot of the combined backlog between the two. Upper line is total, second line is current RPO, the revenue conversion. And of course, bookings beget revenue. And so this is EDA. This is the history of the industry for the last more than 15 years. We don't yet have the Q1 data from ESDA, formerly EDAC, but through the end of 2024, this is a 16-year plot of the industry. And there's probably not many areas in software that have shown this degree of growth like this. We cover a lot in tech, and so this is a very, very specific category or indicator of growth, we think, for this industry. As mentioned earlier, core EDA, this is the amount of core EDA, about $9.6 billion last year. And so this is including the case of Synopsys and Cadence, obviously implementation, simulation, synthesis, so on and so forth. In the case of Cadence, we include PCB and custom. And so, as you can see, this is a quite substantial number. It is, after all, the majority of their revenue. The big three had over 85% share of industry revenue. The gap between Synopsys and Cadence has narrowed, but we do think of late it's become more stable. And also one of the differences, at least over the last 4 to 6 quarters, that has allowed the difference to narrow is the growth of Cadence's simulation software business. That's an inorganic effect. If we exclude that, the difference would actually be still quite substantial in Synopsys' favor because we calculate that the Cadence simulation software businesses that they've acquired, like Beta CAE and others, had cumulative revenue of over $100 million. If you exclude that, then again, the difference between Synopsys and Cadence is smaller than it would have been 5 years ago, but still substantial in Synopsys' favor. One reason that's still the case is the difference in spend at Synopsys by Intel as compared to Intel spend at Cadence. That's the big three, and purple on top, of course, for Synopsys. Cadence, the black line is Siemens EDA. More variable because of their still largely upfront revenue model, which will likely remain the case for the time being. So there's inherently some variability, particularly given the timing and magnitude of large caliber renewals and also as well PCB renewals. That's the combination of big three core EDA. It looks very similar to that previous number I gave for total EDA, and which you would expect because this is the majority of the industry. This is the aforementioned delta between Cadence and Synopsys. The down and to the right means that the gap has narrowed, obviously. Cadence has gained share. But again, the caveat has to be that there's a substantial amount of inorganic effect here that is not purely EDA. Many of the technologies that Cadence has acquired can have EDA implementation or usage, like electrothermal, for example, and CFD. Nevertheless, I think if you really want to keep this consistent in terms of backward compatibility, to exclude that, the difference would be smaller than this line. So this is updated chart I do every year. This is EDA around the world. Largest market, of course, as you might expect, remains the Americas. Green line is Asia. Then you get Europe and Japan. Clearly, there's a a large divergence between U.S. EDA, China EDA, and then Europe and Japan. So that's been widening the last number of years. This is just Asia. So Korea, Taiwan, India, China, and the top blue line, that's China. And as you can see, it does seem to have peaked. That could just be any number of reasons, but there's a lot of concern, of course, as you know, about the impact of possible changes in terms of regulation and trade relations between China that might affect EDA. But in any case, in the meantime, that number has peaked in terms of the China EDA revenue. Conceivably, some of it, maybe a lot of it, will be made up for by other markets in Asia. Korea's been doing well as an EDA market. Taiwan's been doing well. India's picking up as well. So conceivably, if China were to begin to decay like this and continue doing that, the other markets could potentially make up the difference. And this is IP in Asia. Again, as you can see, very large difference between China and the rest of Asia in terms of IP. Not clear that if China were to decay in terms of IP, how well the other markets might make up for this. Perhaps on the EDA side, it might be more readily done. But in any case, a substantial amount of IP has been done in China. And from a company perspective, an investor perspective, one concern, all else being equal, is how much of that China IP revenue has been done as what's called upfront revenue, not subscription. And so upfront can therefore be, or is, highly variable. This is just China. So top line is the totality of EDA and IP. The middle line is the software piece and hardware, then of course IP. So as you can see, we are beginning to see the last couple of quarters some down and to the right. We don't forecast this. We'll continue to monitor it according to the industry data, but it will of course be fascinating to see what in fact does occur with these numbers. So as far as the Big Four share is concerned, again, I mentioned the concentration. The Big Two were over 70% last year, up 6 points in the last 5 years, 9 points in a decade. Siemens EDA has roughly doubled or more than doubled since the acquisition of Mentor. They've done some smallish acquisitions since then, but the bulk of it, of course, is predominantly still what was Mentor, and that business has doubled in the last 8 years or so since the deal was concluded. But the Siemens EDA market share, nevertheless, is quite variable because of their revenue model still being largely upfront, from as low as 16% a few years ago to as much as 20%. So it's basically hovering on average in the high teens. And for 2025, we're estimating Cadence's revenues up 12%, Synopsys as much as 17%, and again, the caveat here is this excludes the effect of possible suspension or reduction of allowable China business. We will just have to take that into account as needed. And then finally, we break out ANSYS EDA. They don't break this out. They don't report it. We back into it. But we expect that this could be a more than $500 million business this year. This just shows the EDA Big Three in terms of market share. As you can see, Synopsys and Cadence generally, sideways to slightly higher, and then the black line is Siemens EDA. Again, largely a function of the variability of their revenue. And this is the Big Three together. So again, this is significant concentration in the industry. EDA, or Big Two revenues and income, as you can see, the Big Two have grown as we've documented. Their profitability has substantially improved. And the companies had almost 40% operating margins together in 2024. So this again underscores a change that we've highlighted the last few years in the industry, where EDA has overtaken what were the more profitable or higher margin companies in industrial software. Years ago, non-EDA engineering software companies had on average higher margins, and yet this is now inverted the last few years, where EDA has become more profitable in terms of percentage of revenue. This, I think, is one of the most interesting changes in the entire industry, certainly from an investor point of view. And that's what this shows. Cadence and Synopsys margins have improved. Cadence is still more profitable in terms of percentage of revenue operating margin. This is their combined margin. And this is the comparative margin for the entire engineering software industry. So as you can see, the red line is EDA, surpassing its cousins in industrial software. And so once the Synopsys deal closes, by the way, not only will they be the largest engineering software company on the planet in terms of revenue, backlog and cash flow, but they will also have the highest margins because Ansys's margins are higher than either Synopsys's or Cadence's. This is cash flow for investors. Cash flow is the ultimate output. This is what determines where we think the stocks may go. For those stocks that we recommend the purchase of with a buy rating, we do attach a price target, and that price target is in turn a function of discounted cash flow methodology, and as you can see, the growth of actual and estimated cash flow is why we continue to have a positive view on the big two stocks, as we show in our reports. This is combined cash flow between the two. Again, very strong momentum. This is, I think, a significant indicator of why the values of these stocks have gone up and why we think they will continue to do so. So product mix matters in this industry. We've said that for years, and we think it's a proven formula for how to assess the industry. And again, the industry data are very supportive of this technique and showing that multiple categories across the industry for years have grown, not all at the same rate and not for the same duration, but the fact that so many categories have grown, I'll give some examples here, is one of the most important phenomena and catalysts in the industry. And we would expect that this will continue for some very powerful technical reasons. So I'll just give some examples of some specific categories. This is synthesis plus RTL simulation. We've shown that the R-squared between these two remain, not surprisingly, very high. This is implementation and physical verification, also closely correlated, as you might expect. But of course, you do have some variability in PV because of the revenue variability around Caliber, which, by the way, we think had over $900 million of revenue last year. So it's clearly one of the largest brands within the industry. For Siemens' purposes, it's its second largest brand after Teamcenter, which is its PLM software. That's over $1 billion. So Siemens is in the advantageous position of having at least two very large brands, one of which is over $1 billion. Again, repeating a point we've made for years now on the phenomenon of hardware growth in the last 5, 10, 15 years, plus, of course, IP. So this has become a nearly $1.5 billion category. Synopsys had the largest hardware revenue, followed by Cadence. We infer that Siemens remains number 3, but also had growth and pretty good year in their hardware business. And we would expect that this will continue to be a growth category as it's been for years. And that's what we're forecasting for this year for Cadence and Synopsys hardware. This is our plot of combined emulation and prototyping revenues. This is, ZeBu and Palladium, Protium, and HAPS. And as you can see, significant growth. Combined hardware revenue, very steep line. And so faster than software, faster than IP, but smaller in terms of total revenue. And then, of course, there's IP, which had over $2.4 billion of revenue last year. This is very, very different from, let's say, 2 decades ago or more, where, like hardware, IP was considered to be not a particularly compelling business for the EDA companies to be in. Certainly the margins were not good. The revenue growth was not really there. All of that's changed. And so this is a compelling, strong, important industry with improved profitability over the last number of years. And Synopsys, as in hardware, has the largest market share in IP over the last number of years. The majority share of EDA IP based on the industry data. This is the plot of comparative IP revenue. As you can see, Synopsys is considerably larger, roughly 3 times larger than Cadence. And this is combined. So again, all of these things fit together very nicely in terms of the totality of product mix across the industry, software plus IP plus hardware, all of those growing, different rates, but all together for important technical and systemic reasons. And that's why EDA, we think, remains for us a compelling investment area. So getting down to the last few minutes, so we should talk about semiconductor R&D. Remains the principal source of funding for EDA. And so EDA as a percentage of semi R&D has continued to grow. It was 19% in 2024, so up several points from a few years before. And so one of the concerns, however, is that after a very nice inflection, we called it the great inflection, to double-digit growth, there was some deceleration in terms of total R&D spend. That was largely due to the impediment of Intel spending, which remains the largest up until last quarter. And so that was a drag. But if you exclude that, you can see that in 2024, R&D was in fact up almost 12% for everybody else, and also 12% for the year ending Q1. And so the other interesting phenomenon, again, is that NVIDIA surpassed Intel as of Q1. And what will be interesting to see now is whether NVIDIA's EDA spending, which is probably somewhere in the mid-9 figures, will perhaps catch up to Intel's, or if they can continue to be extremely productive with what they are investing, which obviously they are, and be able to keep that at a smaller absolute amount than Intel. We'll see. But in any case, clearly, NVIDIA's productivity, their return on their R&D is considerable, which goes back to the earlier comment about the gross profit that they've been able to generate. This is the plot of R&D through Q1 of this year. The red line is everybody excluding Intel. This is just a plot of year-over-year growth. It's kind of all over the place. You had the recession 15 plus years ago. Then you had COVID. Then you had the inflection that I mentioned earlier. Some deceleration, now some modest re-acceleration in the last few quarters. And this is EDA as a percentage of semi R&D. And so clearly this is increasing over time. This smooths it out. This is on a trailing 12-month basis. And as you can see, the trend line is quite positive. This is Intel's R&D. We don't forecast it, we just measure it as they report it. But clearly it's been deteriorated the last few quarters, 4 consecutive quarters of sequential decline. This, on the other hand, is AMD and NVIDIA. Significant difference between those two. And this is the chart I showed earlier that was not labeled. This is showing the comparison between Intel's R&D, the upper red line, NVIDIA. Oh, sorry. Thank you, Rich. Okay, so this is the chart I did not label before. And as you can see, this is the NVIDIA number having gotten ever closer to the Intel number, and in fact, for the quarter, surpassed it. So this is a really fascinating change in the industry. And to quote from the title of a mediocre science fiction movie, this is when worlds collide. Oops, we'll have to do it. All right. That's what I meant. Okay. Okay, so one thing we also track, as you know from previous talks like this, is we track the open positions at the EDA companies. This is total for each of the big three for the last 5 years, from just before the onset of COVID through last month. This is very fresh data. You can see, interestingly, that Synopsys has apparently been filling a substantial amount of positions in the last few months, hence their decline over the last few months in their openings. I interpret this as they're having filled a lot of positions, not a pullback out of business concern or considerations of that kind. This is R&D. It looks very much like the prior chart because R&D is, after all, the largest part of total headcount. This is AEs, which is the second largest number of positions, total AEs. And so clearly there's been a lot of hiring going on in AEs, a lot of that having to do, I think, with supporting their customers for AI and ML implementation. This is the percentage by company. And a couple of last ones. This is one of the important phenomena or interesting phenomena in the industry is the divergence between openings in India versus China. This has been going on now for about a year. And not only in EDA, but from Microsoft on down, companies are clearly shifting their open recs to India and other countries in Asia, but certainly India mostly, away from China. So this is a very interesting phenomenon as far as that's concerned. And this is the ratio between the two. So very interesting change in the industry. In the interest of time, I will skip the usual run-through of the individual company slides. If anyone has an interest in the slides, I can provide those, and it will include Ansys, Cadence, and Synopsys details. But I'll stop there, see if there's any questions. But the bottom line is EDA is doing well. We expect it to continue to do well for what we consider to be irreversible technical and customer requirements reasons. The industry is far more concentrated, which, among other things, gives the EDA vendors improved pricing power, and that in turn translates into improved cash flow and margins. So that's the view, as we see it anyway, of EDA, and if we have time, I'll take any questions. Otherwise, we can go offline. Wally. Thank you. Thank you.
So in the last 15 years, or 10 to 15 years, the biggest change was the entry of non-semiconductor companies into the business of designing integrated circuits, the Apple, Google, Facebook, right, Amazon, Alibaba, that effectively doubled the growth rate of the industry because they buy 1/4 of the foundry wafers in the world today. My question, have we now seen the peak of non-semiconductor companies adopting semiconductor design, and will that growth trend slow down, or are we on a continuum for future growth as new companies decide to design their own integrated circuits?
Right. So it's difficult to measure the EDA spend per systems company. Right? We know they're doing it. We know they're doing a lot of it. In terms of precise spend per company, we assume or think that Apple is somewhere in the several hundreds of millions of dollars, Microsoft at least in the mid 8 figures, maybe more, and so on and so forth. So clearly it's become a significant phenomenon. The EDA companies give us the somewhat unverifiable number that it's 40 to 45% of their business, but that's obviously proportionally higher than it used to be. And so I would say the irreversible trends, my word du jour, is affecting them no less than I think the semiconductor companies. That they have to enable, they have to design their system of systems, whether it's a design center, a data center rather, a car, airplane, and so I think the systemic and process and technical requirements will have to continue to be what they are. And so I think it's interesting to consider that the systems customers have become so important to hardware consumption and IP consumption. And if our contention earlier is right that we're going to see yet more customization, the whole system of systems phenomenon, including in the industrial world, not just in the compute world, then yes, I would say this phenomenon will continue. And so I think that's why it's important for EDA to continue to reinvest as they are in software, hardware, and IP, bring it all together. And it ties back to the very first C word that I used, convergence. Right, and so that's going to continue, and so it is affecting already the M&A strategies of the major vendors, Siemens, Synopsys, and so forth. So Cadence has spent over $2 billion in simulation acquisitions, so we will continue to see this. There is the question what other companies may do to get in on the act or not, but yeah, I think this proportionate and technical and spending trend, it all comes together, and I think it will continue. All right, well, thank you as always for attending, and I will see you in Long Beach next year.